Hi there. How do you go about successfully investing during inflation without you losing money? You see, guys, inflation is a situation whereby the prices of common goods and services are increasing over time, maybe month on month, year on year. And this increase typically ends up corroding your purchasing power. Most people out there typically resort to saving as a way of them really thinking about how they're going to fight all these increasing expenses as their purchasing power is reducing. But the truth is that saving won't really save you. And I'm saying so because, case in point, if inflation is increasing by about 8% annually, okay, and whichever means of you saving is only attracting a gain of 3%, what it basically means is that you're going to be losing 5% worth of your money in real time. That tells you you need to use different approaches for you to be able to, first of all, preserve your money or your capital, and secondly, think about your money increasing at a faster rate compared to the inflation rate, so that you can be able to be at par with inflation or even beat the inflation. That's why I'm making this video, for you to understand how you can go about investing during inflation without you losing money. In case you are new here, my name is Afagzat Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Click the button to subscribe to my channel, because when you subscribe, you're going to be catching up on the videos I upload each and every day. And I'll still add it, drop a like on this video. By the way, guys, before I forget, a few of you reached out to me requesting that I unlock time to be able to provide you one-to-one coaching or one-to-one mentorship on some key aspects around investing and the stock market. Going forward, I'll be unlocking 2 to 3 hours each and every day to provide one-on-one support to the individuals who need this support. So hit me up. I'll put my WhatsApp number down below. You can see my WhatsApp number. Reach out to me. I'm going to be able to listen to you to understand your investment goal and then provide custom insights on how you can be able to level up on your investment. Please note, I'm going to do this at a very affordable rate. So don't hesitate to reach out so that you can level up. Having said that, let's delve into the content of the day. And the first thing you need to do is that you shouldn't leave too much cash sitting idle. Guys, you having cash sitting idle is the easiest way of you losing your money in real time when inflation is increasing. Because you holding cash, which is not growing, is going to mean that you're going to be losing your money in real time based on what the inflation rate is going to be. That is why each of the shilling, each of the dollar which you have needs to have work. Are you saving? Are you investing? Or are you holding it for emergency purposes? And even for emergency, beyond just holding it in cash, there are better alternatives out there. Like, for example, you holding them in liquidity buffers. Like, for example, the MMFs. You can put money there. Yes, you're going to be enjoying daily interest. But then again, in case you need to access that particular money, you can still access it on short notice. So don't leave your money sitting idle in cash. And then the second thing you need to do is that purpose to invest in businesses which are economy proof and also they can raise their prices. What do I mean? Out here we have different kinds of businesses which use different investment styles, okay? And the two basic ones are defensive investing style and cyclical investing styles. Businesses which are using defensive investing styles are typically businesses whose commodities and services are typically in demand despite the situation in the economy. Whether it is a tough time, whether there is increasing inflation, you name it, their commodity and services are going to be in demand. Using a Kenyan example, maybe a telecommunication company, right? Like Safaricom, whether there's inflation or not, you still need to communicate via mobile phone. That means the call charges. You still need to send money. That means M-Pesa or the mobile wallet charges. You still need to use the internet. That means data charges. Such a business is a business which uses defensive investment style. Simply put, they're not really shocked by external factors within the economy that much. So purpose to invest in these businesses because chances are their prices are going to either remain the same or go high. And secondly, also invest in those businesses which are, for example, dealing with typical goods, like fast-moving consumer goods. And that's so because in case of high inflation, if their input costs increase, given these are commodities which we need either way, they're going to be able to push the cost of these commodities to the consumer. And the consumer, given they need these commodities, they'll still have to purchase either way. So what purpose to invest in those kind of businesses as opposed to investing in cyclical businesses, which could be hurt big time based on inflation. And then the third thing you need to do is that you need to invest in real assets. Guys, one of the best way of you trying to see how to beat inflation is investing in real assets. Please note I've told you don't hold cash, right? Because cash will end up losing value in real time. When you invest in real assets typically also factor in the inflation rate as inflation is happening in the economy. And that's so because typically when you look and analyze the economic data, typically inflation is correlated with the interest rates, right? So real assets out there in the economy also do have a portion of inflation costs incurred or inculcated in their pricing. That way, you'll be able to proof your money against inflation because even you might end up seeing your asset appreciate at a higher rate compared to the inflation over time. And I'm talking about all the different asset classes except cash and maybe cash equivalents whose rate of appreciation is very minimal. And even out there, we have some sectors which are gaining big time where there is inflation. For example, agriculture, right? For example, energy sector. These are sectors which are gaining big time. So you could purpose to jump on such kind of assets in those sectors to see how you can be able to proof your money and most importantly, gain faster than inflation based on any prevalent rate of inflation in the economy. And then the fourth thing you need to do during inflation is that you need to continue investing consistently. You know, guys, it is interesting how the market out here works. And an example, the stock market. The stock market rewards consistency as opposed to someone timing the market. Just because there's inflation, it doesn't mean you need to continue sitting on the benches waiting for the ideal time, right? Because inflation won't just stop all of a sudden. Inflation is something which typically happens. The rate is what it varies, right? So you continue investing consistently. And that's so because time you spend in the market is more important than you timing the market. Over time, a person who spends time in the market for a longer period of time, they'll end up surely getting a return compared to a person who's sitting on the benches, maybe holding money in cash, hoping to get into the market at an ideal time. So continue investing consistently and be sure your investment is going to even up over time. Even if you are, for example, averaging up with each investment you are doing, be sure over time your investment is going to yield a good return. And then the fifth thing you're supposed to do during inflation is that reinvest your dividends. Out here we have companies which pay investors dividends, right? Whether interim or final dividends. Most people look at this as their cash bonus for the year, their cash reward. Fair enough, it is your cash reward because the company is sharing their cash or their earnings with you as a shareholder. But then again, the survey of shareholders out there do reinvest their dividends. Because by you reinvesting your dividends, it's going to do two things. First of all, it's going to prove you from getting the cash because either way, inflation is going to eat into your cash. And the second thing, you'll be able to enjoy the benefit of you being patient in the market and your money growing over time. Simply put, the benefits of compounding. You're going to see your investment increase exponentially and also your returns increase exponentially. So keep reinvesting your dividends as opposed to you cashing out. And then the sixth thing you're supposed to do is to avoid common inflation investing mistakes during inflation. And some of these mistakes are, for example, you panicking when, for example, you hear an announcement inflation has increased. Okay? You having all your investment in one bucket or one single investment. Okay? You reacting based on rumors out there instead of reacting based on fundamentals. These are common investing mistakes which investors typically do during inflation. Most of the first one of them panicking. You don't need to panic because remember I've told you when you are investing in assets, most likely the assets are gonna also reflect the cost of inflation in the economy. That's why you shouldn't panic. You need to be very level-headed, only act based on you having done research, understood the technical and fundamental aspects before you react. Don't just react because maybe there's rumor entering the market and you panic. And also, it is important to do risk management. That is why you shouldn't have your investment in one single asset. What if that particular asset is maybe the kind of assets or businesses which are maybe cyclical? You might end up suffering big time. That's why you need to spread your investment across different assets or investments so that you are also ensuring you are minimizing or managing your risk optimally. And talking about that, the seventh thing which you need to do is that you need to build a diversified portfolio. Simply put, have several assets within your portfolio. Because the portfolio concept is that you have several assets where you've spread your investment across so that ultimately you can be able to preserve your capital, possibly gain something, and most importantly, manage risk. That's why you need to build a diversified portfolio, mostly during inflation, so that you are able to preserve your capital and have the potential of upside surge in your return while you are managing risk. And of course, a healthy portfolio needs to factor key aspects. Have you, for example, diversified across sectors, right? Have you, for example, diversified across different company sizes, right? And also, you need to ensure you have proper weighting across the different investment within your portfolio. Don't have one asset being very dominant, and then the rest of the assets, you bundle them under the minority of assets in your portfolio. Balance it out well, and that way, you're going to have a healthy portfolio through proper diversification. And then, the eighth thing you can do during inflation is that invest in yourself. And guys, this is one of the biggest investments you can do. You investing in yourself. Because by you investing in yourself, simply put, investing in your skills, investing in your knowledge, you are also fast tracking the possibility of you earning higher and higher income. Out here, people can only earn to the extent of their knowledge and their know-how. In case you don't know something, you won't be able to earn from it. And even if you earn from it accidentally, you won't be able to sustain the earning. That is why one of the most important things you can do, and continue doing it throughout even during inflation, continue investing in yourself. Because no knowledge out here is useless. All the knowledge which you acquire is going to go a long way to assist you increase your income in whichever area out there. And then the ninth thing which you need to do is continue thinking long term. Remember I said, out here the market does appreciate and reward patience. So the investors who are thinking long term are the ones who are going to benefit greatly more so during inflation. And I'm saying so because remember, inflation comes with a cost. In case you are banking on short-term transactions, maybe you want to get into the stock market today, and next week you're going to be selling your stocks. That is gambling. And I'm saying so because, unfortunately, also the charges out there are going to reflect even the inflationary tendencies in the economy. And at the end, those transaction fees are going to even end up eating huge time into your profit. That is why survey of investors do typically think long term. They are thinking about how can I hold this stock, for example, for a long time, as long as it is still a quality stock or a quality company, so that over time I'm able to enjoy power of the benefits of compounding. I can continue reinvesting my dividends and seeing my investment continue to grow exponentially. So think long term for you to be able to benefit optimally during inflation. And then the 10th thing, which is very important, continue doing review of your investments, of your skills, and just the economy at large to see which loopholes exist for you to be able to continue leveling up when it comes to you investing and making money. So continue to consistently doing review to absorb critical information, to analyze and see how you can capitalize on that particular information for you to be able to grab opportunities which are going to assist you level up on your investment and possibly make money. Guys, those are the 10 ways which you can go about investing during inflation without you losing your money. What do you think about this video? I hope you've gotten a thing or two which you can utilize for you to be able to continue investing during inflation and continue building up on your money as opposed to you losing money. Cheers, guys, and I look forward to catching up with you in the next video. Bye-bye.